So welcome everyone to this next session of the A4S Summit. For the next hour, we are going to be focusing on reporting and doing a bit of a deep dive on some of the current trends. So looking at that landscape of reporting, how it's evolving, some of the challenges faced, and some practical actions that you can take to respond. For those of you who joined a little bit early, you'll know that our first speaker is Paul Druckmann. So Paul is someone I have worked with for a long time, was involved in the original setup of A4S and has really worked for many years to embed sustainability into the heart of the financial reporting world. He's one of A4S's board of trustees and also chair of the World Benchmarking Alliance. Now, I spoke to Paul earlier and we'll be able to share the full discussion, the full Q&A as part of the summit follow-up. But I wanted to just share the part of the discussion focused on reporting and the reporting landscape and some of the recent developments, and really to get his take on some of the outcomes. Now, the video is a little bit, has got a little bit of a delay around it. Technology is not always our friend, but definitely you can hear the key themes that he was touching on very clearly. So I am pleased to hand over to that short introductory comments from Paul.
But I think why I am so excited, with some caveats, but why I'm so excited with the International Sustainability Standards Board coming on, being at COP26 in Glasgow being announced, is the fact that we're going to, in my view, we're now going to have global mandatory sustainability reporting. Where I wanted 10 years ago. Part of their problem is that it should have been 10 years ago and time has moved on. But nonetheless, that does make me very excited, because we've always believed, well, I've always believed that reporting influences behavior. And I mean, there are many things that influence behavior, but reporting in the capital markets does definitely influence behavior. And something we'll come on to later is an expression that I often like to use, is reporting is the lifeblood of accountability. And that accountability term is something that we didn't use in those days, but I think we will do in the future. But overall, if I could be more excited, I would show it, but I am excited by the idea of global mandatory sustainability reporting.
Picking up on that word mandatory, because of course, the IFRS Foundation, the International Sustainability Standards Board, it's still voluntary. It is only when governments mandate that it becomes mandatory. And of course, you have had a lot of signals from governments around the world, both welcoming the IASB, but also a lot of regulations starting to come in place in terms of mandatory requirements, and much more prescriptive, specific, including here in the UK, a reference that they will plan to adopt the ISSB. Of course, also in the EU, you've had a lot of developments and work happening there. And I know you've been involved in some of that regulatory community as well, whether on the UK Financial Reporting Council, but also advising the EU in various of their different committees. What kind of actions should companies be taking now to get ready for those emerging regulations? And maybe picking up on that point on accountability, particularly in some jurisdictions, you are seeing that emphasis not only on that investor-focused reporting, which is really what the ISSB has said it's going to centre its disclosures around, but also that impact that organisations have on the world. And again, coming back to the early work with A4S, looking at those two dimensions was something that was always at the heart of our thinking, and hard to unpick the two.
It is, and in fact, you know, the new book that Paul Polman released in time for COP26, Andrew Winston, I think, and Paul Polman. One of the phrases out of that is that is the world a better place because your business is in it? Which I think is a brilliant starting point from a board. If you actually sit down with a board of directors and say, make that statement or that question, and then try to move forward. And I think what we're too hooked up on value creation, and we were guilty of that in the IRC. We talked all the time about value creation without truly defining what we meant by value. You know, because as you say, if one simplifies it, it's value to the organization, right, is one aspect, and the value that the organization brings to society and the planet is the other dimension. As you say, I think why I had a caveat with the ISSB is that I'm delighted that it's happening, but it does one and not the other at the moment. I believe that I believe in the system, and I think that one has to be positive. You know, the work that the European Union is doing, the European Commission is doing, is much more balanced amongst the two. We've got to make sure that we don't have multiple reporting systems coming through. And the noise that I'm hearing and you know, the things that people are telling me is that the alignment of the work is going to happen. US is a different context, but we can talk about that. But I think the alignment of the work is going to happen. So going back to your point about action, what I'm saying, the key thing is don't wait. It's going to happen. Do you know what I mean? There's no point in hanging around and waiting for mandatory, because you will be behind the curve. Now is the time to get things happening. We know that the ISSB is will have a lot of integrated reporting and SASB standards, the Sustainability Standards Board metrics. It is very likely to. We know that the European Commission is going to have a lot of the GRI standards in it. So, you know, don't blame others. One has to step up now, because there's a lot of preparation to do. But the key thing, Jessica, is not the technical side. It is the mindset.
So that was great to hear from Paul, and some of those opening thoughts to get us going. Now, I'd like to welcome our next speakers. First of all, Matt Ellis from Verizon. Matt is the CFO at Verizon, and Janine Gio. Now, Janine is the CEO of the Value Reporting Foundation and has been heavily involved in some of those developments that Paul was talking about, to look at the role that the International Accounting Standards Board can play, and indeed, as part of the big announcements at COP26, announced the merger into the IASB's international and the IFRS Foundation's International Sustainability Standards Board. So we'll be picking up on some of those developments, and then hopefully we'll also be joined by Brian Moynihan, who is the CEO of Bank of America. And so what I'll do, I'll come to Matt and Janine first and ask for some of those practical perspectives. And then what we'll do is we will bring in Brian to really talk about some of that big picture and from his broad perspective. So Matt, maybe I could come to you first in terms of the practical actions. What would you really see from your role as a CFO? I know that you've been doing quite a lot of work to really try and understand what investors are asking for, and the kind of areas of focus to make sure that you can respond to that investor demand. So love to hear your opening thoughts.
Yeah, thanks, Jessica. And Thank you for the opportunity to join you today. So this is a journey we've actually been on for many, many years. We actually did our first greenhouse gas emissions disclosure 20 years ago. And so we've been building on that for quite a time period. And that was in our corporate sustainability report, which we've had for, close to 20 years now as well. And so that was going forward. But I'd say about 3 or 4 years ago, we started to see a change in the questions we were getting from investors. Prior to that, our corporate sustainability report was as much for our PR and our marketing teams as it was for our investor groups. And as I say, about 3 or 4 years ago, we started to see a significant increase in the questions we were getting from investors on ESG topics. And so, the first thing to do, and it sounds incredibly simple, was just to actually talk to them and listen to them and get more specific about what they were after. And we have a very strong investor outreach program that we do out of our company secretary office as part of our proxy event every year. And so that gave us a good dialogue. We had open communication with investors already through that space. And they were very clear about some of the frameworks and some of the things they were looking for. And so we decided that it made sense for us to focus on 2 areas. One, TCFD reporting, and secondly, the SASB standards as we go forward. So really the 2 things we've done, we took that corporate sustainability reporting that had been going for almost 20 years, but we brought it in under a new ESG office that we established a couple of years ago. We put dedicated people in that area. It wasn't to say they were responsible for all things ESG across the organization, but they were we created this connective tissue inside the organization where they brought all the various pieces together. And then our corporate sustainability report over the last 2 years has now been an ESG report that we did at the end of 2019 and at the end of 2020. And it includes a SASB index within those reports. We make that available. And then also we did our first TCFD report in the spring of last year. And then we did our second one earlier this year. The one we did last year was the first. It was done by a US telecom company. And the second one this year, we did our first physical risk scenario analysis within there, which actually was a very interesting exercise for those of you who haven't done one of those before. And so I would say in terms of investors, understand what they want, and then also understand they know this is a journey, that the first time you report, you maybe won't have 100% of everything in there that people are asking. But what we learned is they want to see that you understand that this is important to them and that you're willing to engage with them and go on the journey with them. And as we started reporting, we got a lot of good feedback, even though one of the things as CFO, as finance people, we like things to be 100% correct and complete and so on. And if they're not, we don't like talking about it until we get to that level, right? That is the bar as finance professionals typically. So this is it was a little different for us to say, we're not going to let perfect be the enemy of good here. And so we got started and got a lot of good feedback, and then just get the chance to build on it. But picking a couple of frameworks there, drawing on the comments you heard from Paul earlier, really gives investors a common language they can talk about when they're getting information from us versus other issuers.
Fantastic, thanks, Matt. That's a really good start. And I'd love Janine to bring you in now to, build up on some of the points that Matt said. And I think a particularly important point that you just said there, Matt, is around getting started. And as you say, it can be tempting just to wait until everything is in-house and ready to go. But we know that mandatory reporting is there already in many jurisdictions and is coming fast, I think, globally. So Janine, a key announcement during the UN Climate Conference in Glasgow was the establishment of the International Sustainability Standards Board under the A4S Foundation, and the Value Reporting Foundation, along with CDSB, has announced that they're going to be merging with that ISSB. Can you really give us a bit of an overview of what's happening, what the key timelines are, and some of those milestones that you're going to be working towards?
Sure. Thanks, Jessica. So there were actually three big announcements that the A4S Foundation made at COP. One, as Jessica mentioned, is to establish the ISSB, the International Sustainability Standards Board. That will be a sister board to the IASB, the International Accounting Standards Board. The second big announcement was the release of two prototype standards. There's been a technical readiness working group working for about the last year on technical preparatory work to give the ISSB a running start. And so that group, of which we were a member, has prepared two prototype potential standards. One is a general requirement standard focused on general requirements for sustainability disclosure. And the second is a climate related standard focused on climate specific disclosure. And what both of those documents did, both of them integrate content from multiple frameworks and standards: TCFD, SASB, integrated reporting, CDSB. And the whole goal was to integrate all of that guidance into a coherent whole. So definitely those two documents give preparers particularly good insight into the direction of travel. And then the third big announcement was the planned merger of CDSB and the Value Reporting Foundation, which houses integrated reporting and the SASB standards into the A4S Foundation. The timeline for that merger to close the VRF transaction is June 30. And then the timeline for establishing the ISSB starts now. The trustees, A4S Foundation trustees, are currently recruiting a chair and vice chair. The expectation is they'll be named within the next month or so. And the plan is to turn the prototypes into exposure drafts that will be issued for public comment, ideally in the first quarter of next year. So everything's on a very rapid timeline.
Thanks, Janine. And I think that point on rapid timeline is a really important one, because I think, standards often have a lot of due process involved in their creation. And that's, of course, important to be setting robust frameworks. But we know that in this area, the last session was focused on climate action. Time is not on our side. So we really need those standards now. So I think that this will require a bit of more agility amongst the standard setters and that rapid pace. And you're also seeing that from Paul mentioned the EU are setting corporate sustainability standards as well for companies based in that jurisdiction. So I think we will really see this coming together. And the other important thing to underline is this is built on frameworks that have been out there for quite a long time. So GRI, the Global Reporting Initiative, your own work through integrated reporting and SASB. So a lot to be building on. Matt touched on that whole question of investors. So, I'd like to get your thoughts, because the ISSB is particularly focused on that investor audience. What kind of questions are you getting from investors? Are they similar to the sort of themes that Matt touched on earlier?
Yeah, so we're seeing very strong support from investors for the ISSB. In fact, the SASB Standards Investor Advisory Group, which includes most of the world's largest asset managers and many of the world's largest pension funds, issued a public statement of support for the ISSB just last week before last. And so I think part of what's driving that global investor support, a couple of things. One is the A4S trustees were very clear that the target audience for ISSB standards is investors and other providers of capital. and that the ISSB standards will be set through the lens of how sustainability issues impact enterprise value, so the value of a company. And that's typically, the first lens through which investors evaluate sustainability performance. So, and that is consistent, very importantly, that is consistent with the existing IFRS Foundation mandate, which is to ensure that information is available for the capital markets, to enable capital markets to function. So very strong global investor support for the ISSB. And I think, and I'd love to hear Matt's views on this, but I think one reason that global investors came out so strongly for the ISSB is that they run global portfolios. And so regardless of whether an investor is sitting in Frankfurt or New York or Hong Kong, typically many of those investors are running global portfolios. And so they are looking for comparable, consistent, and reliable information across those global portfolios. And therefore they really value global standards. And they see the ISSB as a path to achieving at least some foundational baseline level of global standards. We hear less, interestingly enough, less support for global standards from companies. And I think that the company audience tends to bifurcate, and it really depends on the breadth of their operations. But I'd love to hear more about Matt's view on that.
Yeah, Matt, maybe I could bring you back in on that. I'd love to hear more about the practical side as well, but taking that theme forward around global consistency, it was also a question that came up in some of the earlier sessions of how do we really get to global standards. So I'd love to hear your thoughts around the importance of that. And also to the audience, please do keep your questions coming. We'll try and tackle as many of them as we go forward with the discussion as we can. So please do carry on putting them into the Q&A. Matt, what are your thoughts on global?
Yeah, so I would agree with Janine that in a perfect world, we certainly will have a set of global standards. It makes it easier for issuers, especially those companies. We're not as geographically spread as a lot of companies our size are, but understand very much the importance. It makes it easier as an issuer if you're reporting things one way rather than multiple ways. And then obviously it makes it easier for the users of that information, investors and whoever else, if you see it the same way. The one thing that we'll have to get over though is this isn't the first time we've talked about getting to global standards for company reporting, and we weren't able to achieve global standards on things that should have seemed relatively easy, like revenue and how we account for leasing. And so we're going to have to decide how important it is that we have global standards here on ESG topics, because obviously different countries have different interests. And I suspect at some point in the process, we'll have to decide whether we think we can get there, or whether people say this is taking too long, we're going to go mandate our own thing. That would be, obviously create challenges if we go down that path. Hopefully the challenges we've seen around standardizing financial reporting will get people to see the benefits of getting around the table and figuring this out as a global standard. But I think there's going to be a little bit of conflict there between wanting the global standard and then coming back to what Janine and Paul said earlier about we need these now. We need reporting now. The climate isn't going to wait for us to get this figured out, right? As Paul said, we really needed this 10 years ago. Obviously, the climate situation has changed substantially over the past 10 years. We can't take 10 years to get to global reporting. But we do think it's incredibly important that as people work on global standards, we don't need to start with a blank piece of paper. We've got some great frameworks out there already that we've already touched upon. Things like TCFD, SASB, and so on. They lay a pretty good foundation there for the work that still needs to be done. There's a lot of good work in there. The other thing I would say I think that's important is we get companies focused on reporting the things that are material to their business, to their industry. We don't make the approach so exhaustive, it's a little paralyzing, both for the issuers and also for the investors or people reading the reports. So some of those frameworks that have already been put in place, I think, give us a chance to get there. We just now need to move as quickly as possible, and you know, I'll be optimistic and assume we'll get success about getting to a global standard in a relatively short time period.
Janine, I think that's a good point to put one of the audience questions to you. So from Mark, and he's keen to understand how the ISSB value, enterprise value and valuation change will be different to some of the metrics in SASB. So are there some things that SASB standards already do that are going to, okay, no one knows, we haven't got the chair or the vice chair, so of course the board needs to be created first, but from the discussions that have happened in the technical readiness working group that's been going on behind the scenes to accelerate progress, you know, how much do you think will be transferred over?
Yeah, so there are actually 8 work streams of the technical readiness working group. Only 2 of those, the 2 prototypes, have the results been published, because those are the 2 work streams that are furthest along. But another very, very important work stream is the architecture work stream. And it lays out the target architecture for the ISSB standards, which includes the concept of general requirements. For those of you who are familiar with IFRS standards, that's the equivalent of IAS 1. General requirements, the concept of thematic requirements, that's reporting on a theme that is sufficiently pervasive that you can come up with metrics that are relevant across all companies. So a good example of that is climate and climate thematic requirements around climate. And then the concept of industry specific requirements. And that's very, very important for everyone to know, because that is in the proposed target architecture for ISSB standards. That is different from accounting standards. So most of you know, traditionally, accounting standards have not included an industry-specific lens. For sustainability standards, we think it's essential, for all the reasons Matt mentioned, to have an industry-specific lens, and that is in the target architecture for the ISSB standards. And then the SASB standards are envisioned to be the starting point for the industry-specific requirements. Now, the SASB standards will have to go through due process, ISSB due process. They have to go through global due process. There are some US specific metrics in the SASB standards that will have to be globalized. So we envision that being an ongoing process over the next couple of years at the ISSB. But in the interim, especially to meet the general requirements to disclose material sustainability issues, the SASB standards are a reference implementation guidance effectively for the industry-specific aspect of the ISSB standards. So I hope that made some sense, Jessica, but that there's definitely a path to the SASB standards being a component of the ISSB guidance. I also want to talk briefly about the integrated reporting framework, because A4S was so involved in the early days in development of the integrated reporting framework. And so the plan is for the integrated, there's a lot of focus on establishing connectivity between the IASB and the ISSB, and making sure that the traditional financial information and the sustainability information is connected. And the integrated reporting framework, we definitely envision that it plays a role in providing that connective tissue, so to speak, across the 2 boards.
Yeah, and I think that that's a really important piece, because we're definitely seeing investors also asking more questions about how something like climate, but not just climate, impacts the financial statements as well. So having that bridge between the sustainability reported information and sustainability related and financials, we know that connectivity is getting stronger and stronger. Now, we've got quite a lot of questions from the audience around some of the work that is happening in Europe. connection also into the GRI standards. But first, Matt, I'd love to just get your thoughts from a CFO's perspective. You know, this is clearly going to really increase the demand on companies to be putting out robust information. So are there some things that you could share from that really practical how-to perspective of how finance teams can help and you know, how you've overcome some of the challenges you might have faced in the work you've done so far?
Yeah, absolutely. So obviously, there's been a lot of work going on. Paul touched on the importance of disclosure, because once you actually understand where you are, it strongly motivates action necessary to address things. The first thing is awareness, and the reporting provides that. So what the first thing we had to do internally was almost say, we know everything's not perfect here in terms of these numbers, but we're not going to let that stop us moving forward. So companies, finance teams within companies are at various stages of readiness, but you really just have to get started. And it's really no different than in our financial reporting. At times, we'll decide to add a new metric. And as we do that, we have a robust set of standards we put around that. And so you think about ESG reporting, it's not too dissimilar to that. The first thing to do is go understand where the data is. Do you have good underlying data or not? Sometimes the answer is yes, other times it's not. Obviously, if you don't, you then have to go and figure out what it would take to get decent underlying data that you need as the basis of the reporting that you either want to do or ultimately will need to do. But what we just brought the right folks together. This ESG team I spoke about that we created 2-3 years ago, along with our external reporting team, our internal audit group, those groups that would be involved on any external reporting we did. We brought that same skill set together to focus on our ESG reporting. And when you bring those disciplines together, they'll find out very quickly the right path forward. So certainly some of the things we found, we had to go get more robust data so we'd be more comfortable. Others, it was just about, we had the data, we just needed to put the same processes around it. You think, almost SOX type controls around that data gathering. And so, we have the right teams in most companies. We have the right frameworks when you think about SOX, those types of things, to say, how do you have controls over reporting? It's bringing those disciplines to ESG reporting the same way we have as financial reporting. So it's, we have a lot of those skills already. It was just applying it in this new area. We often found the data wasn't quite as robust as we'd like it to be, so we had to go out and add to that. But once we decided to go do it, it was, there's a lot of hard work, but it was some things that we thought maybe weren't going to be possible, we found were actually we could get to, and we just brought the right folks together. So if you view it the same way as, how you think about financial reporting, when you add something new, or when an accounting standard changes, like we've seen recently, and you have to think about, how do I change my financial reporting? What disciplines do I bring to that? Take those same skills and bring it into the ESG reporting area. And so that's why finance has a significant role to play here, because we know how to do that. We also know how to put items in the language that investors are looking for as well. So I think finance has a huge role to play within companies here as we go down this path. But we'll also, what most companies will find is you actually have the disciplines internally necessary to get started on this journey. And the biggest step is the first step, just to say, we're going to get started on this and we're going to do it. And then the rest of it, you'll find it builds, and the momentum comes as you make progress.
Fantastic. So Janine, I'd like to bring together two of the themes from the audience Q&A and put them to you. So one, just to give you a flavor of the kind of questions we're getting from Robert, asking about the role that the ISSB might be to play a bit of a floor, so that global floor, but then that the EU is going further. And from Sally asking about that question of materiality. So what the EU is talking about is dual materiality. And that's certainly something from an A4S perspective. We've been doing a lot of work on reporting for many years, but our CFO Leadership Network and some of our other networks, including our accounting network, are developing more practical guidance at the moment. And of course, those questions on the robustness that Matt was just touching on is one of the themes coming out from that, but also materiality and how do you work through that. So I'd love to hear your thoughts on that.
Sure. So let me take the robustness first, because I think to build on what Matt said, which I thought was brilliant. And the way I think about this is it's a mindset shift to make sure that sustainability information is viewed as important as financial information. And when you do that, then you immediately get to internal controls, where the internal controls over the information, what's the governance over the information, and how do you get that same reliability as financial information. One thing I would add is equally important is to also think about engaging in standard setting. So, most finance teams are very comfortable engaging in accounting policy standard setting. Now thinking about how to engage in sustainability standard setting, that's going to be an important role for finance teams going forward. So I would add that one thing. On the question about materiality, one of the things that I think is definitely complicated about sustainability disclosure is this concept of materiality, and that different people use materiality to use different things. So to mean different things. So the way a chief sustainability officer has historically used the term materiality, especially doing a GRI-based sustainability report, is materiality is what are a company's material impacts on society. And then the way a finance person or an accountant uses the word materiality is quite different. It's often through the lens of how does this impact the financial statements. So what we've had to do through all the work we've done to try to bring some more coherence to this system, the reporting system, is try to get people on the same page about the use of the word materiality. And I think that the nested materiality graphic, which some of you may have seen that we've used in many of the things we've published, really lays that out. It lays out the concept. There are 3 layers of information. The smallest layer is the information in the financial accounts, in the financial statements. That's the inner box of a 3-box graphic around materiality. Then there's a second box, which is information that is relevant to enterprise value. That is the value of the company, but is not captured by the financial statements. And then the broadest set of information is information about all of a company's impacts on society, regardless of whether those can be demonstrated to impact the value of the company. So that we've gotten that way to organize talking about the kinds of sustainability information and the audiences for sustainability information. We found that to be quite helpful. The one thing that I think there's still significant confusion on is the idea that somehow the information about societal impacts and the information about enterprise value are completely independent data sets. That is not true. That is not true. The enterprise value relevant information is a subset of this broader information about all of a company's impacts. And that's really the path to trying to harmonize information globally, which is, given that the enterprise value relevant information is a subset, trying to ensure use of consistent metrics wherever possible, regardless of the target audience, regardless of the materiality concept used. So try to use consistent metrics. And then what gets less attention, but is equally important, is some kind of common organizing framework. And I can't emphasize enough how important that is, because everyone who comes at the question of sustainability disclosure invents a new organizing framework, okay? Is it TCFD's 4 pillars? Is it IR 6 capitals? Is it SASB's 5 sustainability dimensions? Is it GRI's 3 themes? And FREG is using 3 themes, E, S, and G. That difference in organizing framework is what drives companies crazy. And so we've got to, this is one reason I think the ISSB is so important, is to provide a vehicle for trying to standardize some kind of organizing framework. And if you can do that, then it's just a matter of adding incremental requirements for different views. But at least if you're a company, you've got one way to approach structuring your data, which is essential if you want any kind of efficiency in your processes.
Fantastic. Well, Janine, Matt, I'd like to thank you both for those thoughts. I want to bring Brian in at this point, and I think that's a great segue. But if I could ask you both, just in one sentence, if there's one final action that you want to leave the audience with before I raise some of the questions that we've been talking about so far and look more broadly at the trends with Brian, what is that single action? So Matt, first to you.
Yeah, I would just say get started. And as as mostly CFOs you have on at the summit here, we're uniquely positioned. People assume that we'll say no to a lot of things that don't have a financial return as the key focus. So when in our seat, we're the ones that starts asking questions on this. It has an impact across the organization. We have the ability to have an outsized impact. So I'd say I would ask all of the CFOs listening and watching to say, what can I do to step up within my own organization? And as simple as just reporting may sound, starting that is a huge first step if it's something that you haven't done already.
Fantastic. And Janine?
Ditto, get started and progress, not perfection. Those are my 2 things.
Fantastic. Well, thank you both very much. And a very warm welcome, Brian, to you. So Brian is the chairman of the board and chief executive officer of Bank of America. He's been leading the way in terms of a lot of the recent developments in terms of sustainable markets and particularly co-chairs with His Royal Highness, the Prince of Wales, the Sustainable Markets Initiative. So Brian, it's really great to have you with us. I know in the last few years, there's been a huge increase in demand from the capital markets in terms of better quality, more consistent, comparable data. We first met 3 years ago at the time in person. Now, of course, we're more in that virtual world. So I'd really like to get your thoughts on how we've done since in the last few years. It really feels like we've had a shift in demand. So I'd like to get your assessment of those developments.
Thank you, Jessica. Let me start with backing up. A4S has been doing this for a long time, and I congratulate you and all your colleagues on the efforts. It is the birth of, in some ways, the SMI coming out of that, and some of the other things His Royal Highness, the Prince of Wales, we talked about. And remember what the SMI now is 300 CEOs, coalition of the willing, private sector led, encompassing all different types of businesses, including private equity, including fashion industry and things which typically haven't been organized together, along with hydrogen, carbon capture and storage. And that effort is drawing the lines in the private sector out, saying we're after obviously changing on the environmental and how can we work together faster. And so the history of A4S and everything's strong. Now, let me go to your sort of broad point. Look, if you think about it, from a few years ago, we talked, where we are is a group of companies have under the IBC metrics, which go to the as Janine was mentioning, the organizing framework. Those are the SDGs. They follow the 4 pillars of the SDGs. The big 4 accounting firms, going to some of Matt's comments, looked at all the metrics and came up with metrics that all companies should be able to deliver on. We now have 50 odd companies who are actually publishing today, and we have another 50 who are going to publish them in the next cycle. And so all the discussion went on with Matt about how to, how companies, and Janine about how companies have to actually produce the numbers. If you look at our annual report, I think it's pages 41 to 44, there they are. They're published. They went through all the rigor of our accounting teams and stuff, and they cover everything, including all the different all the different SDGs. And so if you ask society, what do they want from all of us, including governments and companies and the accounting fraternity and standard setters, they want us to get the SDGs implemented, and here they are and how we're doing it. And so that's the broad path we've been on, and we've seen some success. Been working with Janine and her colleagues of the World Economic Forum, kind of merging together different standard settings that set it up, and then ultimately the IFRS agreeing to take on the task, which is important for investors. Yes, but actually it's more, I come at it as an issuer as much as an investor. Remember, we're in all seats. We're one of the biggest companies in the world as an issuer. We're also one of the biggest capital markets companies, but also we have $4 trillion in investment assets with us too. So one of the biggest investment managers. And so that's the key. We come at it in all different aspects at Bank of America, as do my colleagues. So we're not coming at it after in any different point. What we're trying to do is get some rationality around this, that the whole world can agree are good, the standards to get people started out and really get going.
Thanks, Brian, and picking up on a couple of those points. So you talked there that I think it's a really interesting sort of almost 3-way perspective as a bank, so as a financier, as an investor, but of course as a company in your own right. I understand that the World Economic Forum has also been involved in this ISSB development, so helping the IFRS Foundation. So I think that, again, that's a really important example of how everyone is really coming together to make it a much easier landscape for people to navigate. But I'd love to get your thoughts around where do you see some of the remaining barriers? Are there some key challenges that either you as an organization or all of the different companies that you work with are really still grappling with?
Well, I think the key is to get going, and the key, as Matt said earlier, the key is to have a set of standards which get people committed to a task and then fine tune underneath them. And as Janine said, yes, everything impacts enterprise value, but we have to be careful about if we disclose all this information, investors that are overwhelmed. And that's one of the other things, is to try to make the metrics simple and consistent enough that can go across all industries, across all geographies. We have people disclosing this across all parts of the world under different types of accounting standards, and all different types of companies. So that's been the goal. I think the biggest issue as you think forward is, if you just take the environmental space as being a key one, we got to get everybody to commit to go forward. And so while the discussion's always about public companies and larger companies, the key to moving it to second pillar of accounting standards and sustainability standards, that it applies to everybody. And so this idea that somehow the private sector will hide from the private owned companies will hide from this, the idea that I'm not sure that that's true, but there are people who raise those questions. What you do when you move from a standard setter to someone to a more like an accounting standard is you move it to all companies have to comply. So over the last few years, Carmine and Bill and Puneet and Bob and I have talked to thousands of directors of smaller companies. I've talked to private companies. I've talked to private equity companies under the World Economic Forum, IBC, so ages, talking to them about how, this is going to go across all companies and should. And so that's key. So if you think about that environmental context, if a major company commits to net zero, its entire supply chain has to effectively get to net zero. And being able to ascertain that, just as Bank of America, the law firms that supplies law firm service can have to be net zero, to have a simplified, straightforward way for them to sort of certify that, so they can get in the bidding for our legal work or our accounting work. You pick things, service companies, which you don't think of this way, but that's the reality. And so we're trying to also help our mid-sized companies understand this is going to come at them in different ways, the commitments by larger companies to these, and the need to make sure the supply chain is consistent with them, environmental first, but also going to be in terms of human capital requirements. Remember, these are metrics that the IBC developed go to human capital. And so I think that's the big to-do, is to get this across all operating entities equally, so that if we believe this is the standard of creating good for society, then all companies have to operate this way. And that's what we firmly believe. So the key is to get it done that way. Then the second key is to educate people about the transition. And the third and most important is to get people to take more and more action, especially around the environmentals mentioned earlier, is that we got to get going, and people are going. And, and there'll be debates about what the best path is and whether the perfect path is. But the idea is a step forward tomorrow is better than nothing tomorrow.
Yeah, no, I absolutely agree with that. And I'd like to pick up on a couple of the points you were raising there. So that question of smaller companies, private companies, I think is a really important one, because so much of all of our economies is made up of smaller entities. And I think large corporations have a really important role to play in helping others along the value chain to take action. You touched there on some of the work that you've been doing and having some of that dialogue. So I'd love to hear, are you finding with those smaller, medium-sized enterprises that they feel like they are equipped to take action, or is there more that collectively we could be doing to give the kind of support that's needed, both in terms of setting the targets, and that's a key part of it, but then also having the kind of information to be able to track progress and understand how we're doing?
So that's where the SMI work has been kind of interesting. So in the Financial Services Task Force led by Noel Quinn, the group there is 11 or 12 of the largest financial institutions in the world, but they developed a playbook that could go to all banks to how to, what a net zero commitment means, how do you implement it in your portfolios to get those finance portfolios. And so that's the idea. It was basically sharing the IP that got us there, in the big companies with net zero commitments. And it's not easy. You have to work it. You have to understand it, all the description earlier. But in your finance portfolios and things, it becomes even extremely more complex. And so the idea was to create a playbook to democratize the IP out to everybody. So those kinds of actions are getting people. So that's on the, the side of the lenders and mid-sized banks, et cetera. Then if you move to the operating companies, you're seeing more and more work develop of people like ourselves sitting with our mid-sized clients and small business clients and saying, here's what net zero means. And we've been conducting sessions with those clients in our base. And what's been interesting, going to your point, we had a series of clients, and one of them was a net zero farming enterprise producing beef already, and it was a smaller firm. And the question is, can you scale those things? Can you show they work? And so there's not only we're educating, we're also learning from them how they've done it, and then how we can bring that to other clients and have a commitment that we actually make things happen. So I think this idea of information exchange for the good of getting, in that case, the environmental framework built out and people moving is critical. So I think we have roles in as big companies to educate the small companies, but also when we talk to smaller companies, there is a financial risk downstream. If they could lose contracts, they could lose their customer flack, because there's very few companies that don't depend on the supply chain somehow in their production. And somebody comes knocking on the door some days and says, I'm not going to buy the lug bolts for my cars from you. I'm going to buy them from somebody else because they have green steel. That's going to be kind of an interesting question. So we have a duty to educate everybody. It's going well. There's a desire to do it, not only for the right thing to do, but also for the pragmatism to it. And I think it'll start with environment, it'll go to human capital, and then it'll, because some of these mid-sized companies aren't involved in, international elements that are the same, so they don't have the Corruption Act and things like that, the taxation and other parts of the standards that we have. But, it'll be more, nuts and bolts into the supply chain and around environment, around human capital.
And you touched on human capital there, as well as climate, and of course, as you highlighted, the Sustainable Development Goals, I think, give people a really good framework to think through the breadth of issues that we might be touching on here. One of the questions is around the role of regulators, and I mean, you're based in the US, so picking up on the SEC, I mean, do you see the SEC as progressing in this area? What kind of things are you hearing from them in terms of both that global agenda, but also from a US context?
Well, I think the SEC is in the process of finalizing some rules around probably around the environment and human capital. It seems that obviously environment, but remember the SEC is a disclosure-oriented group, and so it's the difference. The IFRS and it's FASB at the end of the day that has to change the accounting standards and so there are differences in terms of who's doing what to whom type of thing, and so I think. I think there'll be new standards there, and they are talking to a lot of people about them, investors and issuers and everybody looking at the IBC metrics, looking at other metrics and trying to figure it out. But, we all have to remember that at the end of the day, there are limitations to these organizing bodies groups. And that's why pushing it to the official sector, pushing it to the accounting sector, the core financial calculation sector as opposed to the pure disclosure sector gets that to be more. And then, remember the SEC only governs public companies and public securities to a large part. So therefore you have all the private companies out of it again. So that's why we need to keep pushing it into I think to Janine and her colleagues' credit, the amount of convergence that's gone on is critical to get us there, because I think we created, all of us working on this and pushing after many years, have created the urgency to come up with an official sector. So I think I'd be careful about understanding that distinction at which your colleagues on these types of things are very sophisticated and do, but that's a distinction that's not known in the public generally. Is the SEC does one thing, but the reality is what's different with the IFRS effort, or what could be different with the FASB effort, would become applicable to all accounting and financial statements and reports, as opposed to just the public companies again.
Yeah, and I think that's a really important distinction, and also the fact that the IFRS Foundation and FASB, they can set the standards, but they don't mandate them, and that's another key distinction. Brian, I think we've got time for one final audience question, and then I'll ask a final question before we'll sadly be out of time. So one of the things that definitely came through very strongly during the COP26 summit, and I think a lot of companies are grappling with, is this question of greenwashing. So I think that the having reporting standards and that role of potentially auditors' assurance can play a key role. But I'd love to get your thoughts on how are you navigating that? How do you think companies can really make sure that they're not on the front page being accused of greenwashing?
Well, the reality is that term has a lot of different meanings. It has the meaning of divesting a non-green part of your company to a private sector, therefore eliminating your need to worry about it, and someone else has it. That doesn't accomplish any societal good. So that's one sort of method of greenwashing. The second is, what are offsets and how do they count? That's another discussion around greenwashing. So there's actually many different definitions of greenwashing going on out there at the same time, and people think they're saying the same thing, but they aren't. And so I think that's where it comes out, to have clear standards. What we've been saying for a good while is, even if you're in a heavily hard to abate emitting industry, give us a plan. And that's what you're seeing in some of these shareholder votes and other things. Give us a plan. Let us understand the plan as a lender, as an investor, as society, whoever, and then give us markers to see that plan moving. Ultimately, that plan has to be aligned to Paris and all that stuff, but just give us a plan so that we know that you're moving. And that's been the interesting effect of when you ask what's different in the last 3 or 4 years. So I think the antidote to greenwashing is the disclosure, but I think it also takes, people have to sit and think about it, saying, look, if you're in one of these very hard to abate industries, you're going to make a series of choices. I'm going to maybe move this asset off my books faster. That's not, it's accusing of greenwashing, but maybe the way that I can take my capital and deploy it to the other assets. And by the way, I just was out in Fargo, North Dakota, and there's a company that bought a coal-fired power plant out and was putting carbon capture storage technology on it, and can put it in the ground right locally there. And it's kind of that kind of business proposition would be greenwashing by the seller, so to speak. But the reality is, to put it in the hands of someone who is going to operate it in a way that with the technology, this isn't theoretical, this is actually out there operating. And so, I think this is going to take a lot of people just sort of stepping back and saying, do people have a plan? Are they making progress on that plan? Then we ultimately have to make sure those plans are all aligned. But the key is to get them on the table so people can analyze them and then push people forward. And I think, that's the good news. And so I think one person's greenwashing, another person's practical resolution of the problem. And so that's kind of the tension. And so I think I just ask everybody to step back and think about it. Do people have a plan? Are they moving along that plan? Ultimately, does that plan have a net zero commitment? Because one of the things, remember, net zero commitment by a company is actually an internal tax on carbon to itself. Because at the end of the day, what you can't abate, you have to pay for to abate somewhere else, but you can't reduce. And that difference then has to go to offsets. The offset market has to scale. And that's one of the pieces that the SMI has been working on, and as have other groups and Mark Carney and GFANS, is how do we scale the offset markets? And Bill Winters and the group working. Those are critical elements because they've got to scale. So the debate shouldn't be what counts. The debate should be here's what counts and let's scale it, because then we can actually create that outlets for that tax and do good things. So there's a lot of complexity to it, but I think when I talk to companies, they're generally trying to solve a very difficult question, especially those companies that are in the tougher sectors. And they're working at it. I think we have to then get that plan on the table, support them, and hold them accountable for that plan.
Great, thank you, Brian. And I think that there's some really interesting points there, and certainly some that, from an A4S perspective, and thinking about the role that accounting and finance can play around providing clarity there and support, and absolutely agreed on transition plans. Now we're out of time, so if I could ask you just in a sentence, same question as I asked Matt and Janine, if there's one takeaway you want to leave people with in a sentence, what is that?
Get going. I mean, it's that simple. It disclose these, the metrics are out there, disclose them, get going to improve them. And that's get going. Every step we take today is one, it has, in the future, has a much bigger impact. So get going.
Fantastic. So real unanimity, I think, from all of our speakers. So thank you very much, Brian. Really great to have you with us.